We may be repeating history because of this. The 2008 recession, the Lehman Brothers during that period was handling $600 billion. People thought that this company couldn't possibly fail, but when the financial crisis hit, the company was taken down. Credit Suisse and Deutsche Bank are handling $3 trillion, with their stock declining. How will this affect the entire market? What does this mean for the market if one of these banks actually fails and gets taken down? Before we even get to how this can affect the market and what will happen when one of these banks fail, you'll have to know first how the banking system works. We'll get to the nitty-gritty of it all. Let's get into Credit Suisse. What's Credit Suisse? This is one of the biggest banks in the world. It's a global bank that handles $1.5 trillion. Now, that's a lot of money. Now, what does this have to do with the market? Credit Suisse being a global bank, handling that much money, they have a huge impact on money-related transactions in the market. They are marked as not an essential, but a necessary part in the progress of the economy. Credit Suisse is one of the most important institutions in Switzerland that has gone through scandal after scandal. Credit Suisse is ultimately a private bank catering to the wealthiest people in the world. The bank provides advice and security to the richest people. When I say scandal after scandal, these scandals got so out of hand that they were even hard to believe sometimes, from spies to all the line to drug money and embezzlement. Some things that you'll think you'll only see in movies, but no, these actually happened. If you look into their history in 2017, you'll find that Credit Suisse came into an agreement where they said they would pay $5.3 billion. This was for a fine, since they overvalued mortgage-backed securities when the financial crisis in the year 2008 was going on. As a consequence, we lost billions of dollars that affected the average earning Americans. There were more instances that resulted in us losing a lot of money. Another was them forfeiting $536 million because they violated the International Economic Powers Act in 2009. They were also caught up in a case where they pled guilty, where they needed to pay a $2.6 billion fine. That's not all. They also lost $4.7 billion thanks to a failed investment which defrauded its clients. The cherry on top is that in the year 2022, at present, their clientele lead, but we won't be doing any name dropping, or we'd have a problem on our hands. They really need to focus on risk management and changing the culture, which has been embedded in the bank. Will definitely be no walk in the park, but it can be done for the rehabilitation. It will take a long time for them to bounce back and regain the reputation they have lost or tainted. The market is volatile and the bank is market dependent, but it's estimated that the bank can still reach a profit in the year 2022, which should count for something. It's not a guarantee now that they have acknowledged the root cause, that there will no longer be any scandals that can put the company in jeopardy, because it is still possible, because it seems that every month, every quarter, a scandal appears. So who knows when the next one will be? But in trying to stay optimistic, Credit Suisse says they'll take it all step by step. Next, you have the Deutsche Bank, similar to Credit Suisse, where they too are a global bank that manages $1.5 trillion. Hence, they are also necessary in our economy. Unfortunately, like the Credit Suisse Bank, they also got into some issues that lost us a lot of money. In 2007, they were charged for misleading investors because they didn't issue mortgages responsibly, so they had to pay $7.2 billion for that. They rigged interest rates, which they had to pay $2.5 billion back in 2015, since they got into more trouble from tax evasion sanctions to money laundering. Now, why are there rumors that these banks are on the verge of failure and will be going under? What sparked these rumors was the statement the CEO of Credit Suisse made. In the statement the CEO made, it was said that they were in a critical moment and reminded employees that they should not confuse the stock prices with the firm's position on strong capital-based liquidity. Why did the CEO of Credit Suisse say that? This is because they'll be doing a major restructuring. Aside from their stocks declining by 90% in the last decade, they'll be doing a major restructuring in aims of making the company profitable again. But when doing a major restructuring, they'll need a lot of capital. So now people are thinking that this is their effort to stay afloat, since this is also similar to what the Lehman Brothers did before their company took a downfall. For a bank to operate, they need to pass a stress test. What's the stress test for? The purpose of this stress test is to show that the bank can overcome multiple possible financial conditions. In the last stress test they took, the results were not so good. They lacked the funds to even restructure the company. When the news was out to the public, all hell broke loose. Now you have that Credit Suisse employee calling you on a random afternoon, trying to reassure you that everything in the bank is going fine and all is well and dandy. Just trust us and we'll take care of you. This sent people panicking. Investors started digging deeper in the financials of the company, which wasn't at all reassuring because all they found was declining financials and dwindling returns. This all has a major impact on our economy. It all starts with credit default swaps. What's a credit default swap, you ask? Each time a bank gives out a loan, they can either buy a credit default swap, which acts like insurance if they don't get paid back. So basically, one bank can transfer the risk to another bank for a fee, of course. So now the other bank has the risk. If in case the principal bank doesn't get paid and the bank they transferred the risk to has to pay the principal bank back, the second bank that has the risk assumes all the rights of the underlying investment and can collect enough from credit default swap purchases to offset the risk. Although, when a bank issues too many credit default swaps and in turn doesn't have enough cash to pay for all the insurance payouts, they would need to raise enough money to cover all of these, and if they're unable to do so, they'll go under. It's what happened to the Lehman Brothers during 2008, where they didn't have enough capital. If we take a look at what's been happening recently, Credit Suisse Bank may not be able to pay off their debts. Their second co-head, who has worked for about 27 years in a company, is leaving the company after only months of being promoted. They've been on the losing end of bad trades, which resulted in them having a $6.5 billion debt. At this point, they're just drowning in debt, so they scaled back their entire operations, having to lay off employees, and to add to all that, they have a pending $800 million lawsuit. The collapse of the Lehman Brothers resulted in 26,000 job losses. Their loans dried up and people started to worry about what would happen to their investments. Following the fall of the Lehman Brothers was 75 more bankruptcy proceedings. A week before the Lehman Brothers went under, they also announced a new survival strategy they had planned out. Imagine that the Lehman Brothers were only 1/4 the size of Credit Suisse and Deutsche Bank. So given the catastrophic consequences of the fall of the Lehman Brothers, one can only imagine the consequences of the fall of Suisse and Deutsche. However, some analysts believe that the speculations have just gotten out of hand, that the banks are just struggling now, but are unlikely to go under. But it's kind of like a self-fulfilling prophecy, where people believe that these will fail, so the lower the prices will get and the less money the banks can get for their capital to restructure. They're already losing private bankers because of all this, so these banks could be in real trouble. But because they're necessary to the economy due to their sheer size and the money they handle, the government would support them in the case of their downfall to avoid all the catastrophe. They also say that they have about $100 billion for a buffer capital. The government would probably not even let their downfall happen, since they know how integral these banks are to the economy. At this point, we can only wait and see what happens next. That's all for today, eggheads. I hope we gave you a clear description of the possible economic collapse. If you found this video useful, please subscribe, click the like button, and hit that notification bell to move further with each video towards being an egghead yourself. Catch you in the next video, aspiring eggheads.